Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit, and my name is Alex Mathew. Like the name suggests, this show gets you answers to all of your stock-related questions. To that end, you'll see a number at the bottom of your screen. That's where you send your questions to us, and it can be either short-term in nature or long-term, whatever you need to know. But make sure you send your question in with your name and, if possible, your location as well, so that you can understand when we take up your question. Let's take a look at where the markets are right now. And in fact, you see gains across the board, and it's a solid end to what has been a very volatile trading week. The big question is, will we hold on to these gains for once? And perhaps we'll see soon enough. You see gains of about 1% or so, and we're holding above the 24,300 mark, close to 24,350. The broader markets are gaining, but not to the extent of the benchmark index. And you have the mid-cap index that's up about 0.8%, and the small-cap index is also up by around that same value. The market breadth is tilted in favor of the advances. Remember, this is in tune or in line with what you're seeing across the board in global markets as well. If anything, that gap has narrowed just a tad bit over the course of the session so far, and hopefully it holds through for the rest of the session. All sectoral indices are trading in the green right now, and you have the Nifty Bank among them that is trading with gains of about 0.7% or thereabouts. And you have the IT pack that is leading gains today, up as much as 1.6%. A lot of stocks reacting to earnings in trade today, whether it's Cochin Shipyard or in fact ABB India, which we're focusing in on. And in fact, that is the focus for the day. Cochin Shipyard on your screen, but ABB India, given up a bit of the gains from earlier on in the session. It was up over 3% at one juncture, but it is still up about 1%. And if we can pull up the longer term charts, you will see that this stock has risen from strength to strength, and it is on the back of earnings. Look at that. In the 12 months, it has gained close to 77% or thereabouts. And the June quarter earnings were quite a super hit. You have net profit growth of as much as 50%, and that's on the back of a high base. It's not something to scoff at. In fact, let's look a little closer at the numbers for ABB India, and we've got Anushi joining in with some updates also from the conference call which took place not too long back. What is the outlook, and what is the reason why we've seen this kind of improvement in the bottom line, Anushi?
Well, the outlook continues to remain strong for ABB over here as per the conference call which happened. But before we go into that, let's just discuss the numbers that the company came out for its Q2 CY24 performance. Now, looking at the revenue growth over here, a 12.8% of an increase that we are looking in the revenue, while EBITDA was about 55.7% up. Even if you look at the EBITDA margins, that were about at 19% as compared to 13.88%. So the company does say that the extra margin uptick that we are looking at is on the back of the revenue mix of a favorable revenue mix on the higher margin side, and along with higher order execution as well. Net profit as a result has seen about a 50% growth. Also, other point to focus on the margins is the raw materials cost going down by about 4.7%, while the total operating expenses as a contributor to revenue came down to 80.8% as compared to 86.1%. In other key highlights also, if you look at the orders, well, if you look in the H1, if you look the overall period, there has been a 13% of an uptick in orders. But if you just look at the coming this quarter in particular, a 5% uptick in 5% decline in orders that we are looking at. This was due to the base cycle orders, but the company does expect this to also pick up going forward. Order backlog stood at about 9,500 crore as compared to 7,700 crore. Now, coming to the con call highlights over here, it sees large orders coming in from emerging sectors. PAT, as explained, expanded due to the favorable revenue mix. Export orders were about 39% up, and the company did say that in fact in revenue also it expected 200 crore more revenue, but on account of orders, it showed a less 200 crore of revenue. In order backlog, if you look at 40 to 45% of orders remain in the long cycle side, while the balance are in the short cycle side. Now, an important point to raise in ABB is its valuations. If you look at the trailing PE as well, 139x of valuation, PE valuation, while its 3-year average has been about 108x. And if we go forward to the overall CY24 PE also, that stands at about 105x. So it is on the premium side. Despite the kind of premium valuations that we are looking at, the stock has performed. In fact, there was an interesting note from UBS as well, wherein it did mention that wherever there has been an earning upgrade for the company, it has supported those premium valuations also that we look at. So these are a couple of factors that we have seen from the con call. Strong management outlook for the business going forward as well, and strong numbers in focus for today.
Okay, thanks so much, Anushi, for getting us those details. I do want to point out that we have the mutual fund data for the month of July that is out, and I'm pulling up the data release as we speak. Let's look at it as I speak to you, in fact, and you'll see some numbers flashing at the bottom of your screen as well. I'm looking first at the overall number, and for the overall number, we're seeing a significant inflow for the mutual fund industry as a whole. Inflows to the extent of 1.9 lakh crore rupees, as a result of which, and also the movement of the underlying assets, you have the mutual fund industry as a whole that has assets under management at the end of July of close to 65 lakh crore rupees. Now, delving down into the key pockets, and we're looking, of course, first at the equity actively managed schemes, which include the likes of the small cap, the mid cap categories. For that category as a whole, for the equity category as a whole, you're seeing inflows of 37,113 crore rupees, which is very substantial and is in line with what we've seen throughout in the month of July. And at the end of the month, you had assets under the management in actively managed equity schemes standing at 29.34 lakh crore rupees. This, of course, compares with about 40,000 crore or 40,600 crore of inflows in the previous month. I'm looking at the key categories here, and you're seeing substantial inflows in sectoral and thematic funds once again. And if you think about it, you've seen close to 40,000 crore rupees come in the month of June and in the month of May cumulatively. And in this month, in the month of July, you're seeing inflows of as much as 18,386 crore rupees. It's a very substantial number. This, by the way, is one of the largest schemes now. It has come in the second position, just behind FlexiCap, and it's not too far away from pipping it. In fact, you have the assets under management in, it's actually pipped it. As I look at the screen right now, you have sectoral and thematic funds, which are the largest category in the mutual fund space for actively managed equity mutual fund schemes. And this is a historic moment because a lot of people making tactical allocations towards mutual funds. That number stands at 4.21 lakh crore rupees at the end of July, compared with 4.2 lakh rupees for FlexiCap schemes, which for the longest time have been the largest category. Take a look at some of the other inflows then, and you have inflows of as much as 7,000 crore rupees that have come into multi-cap mutual fund schemes. And this is when the split happened between multi-cap and FlexiCap. Multi-cap, remember, has a specific allocation of 25, 25 and 25% towards small, mid and large cap. And that is a requirement regulatorily. That has seen an inflow of 7,000 crore rupees. Among the other schemes, and we're looking at mid cap and small cap, you're seeing inflows continue, but it's a little slower than it has been in several months over the last year or so. The mid cap mutual fund scheme space has seen inflows of as much as 1,644 crore rupees in July, and the small cap schemes have seen inflows of 2,109 crore rupees. Large caps have also gotten inflows to the extent of 670 crore rupees or thereabouts, and flexi caps as a whole have received inflows of as much as 3,000 crore rupees. Now remember that July is the start of a quarter, and generally you will see the flows in mutual funds reflect that with regard to fixed income mutual fund schemes. And for fixed income mutual fund schemes as a whole, you are seeing inflows of as much as 1.2 lakh crore rupees. And this is what has contributed to most of the inflows into mutual funds in the month gone by. A large amount of this, in fact, more than half of it, is in the form of liquid mutual funds. And this is largely institutional investments that come through at the start of the quarter at the end of the quarter, you see outflows from liquid mutual funds and also fixed income mutual funds as a whole. To give you some perspective, in the month of June, you saw outflows to the tune of 1.07 lakh crore rupees from fixed income mutual funds. This time you're seeing an inflow of 1.2 lakh crore rupees. That cyclicality tends to take place. You also have arbitrage funds, which after the change in taxation have become less attractive. I'm curious about what has happened there. Let's look at the inflows. Arbitrage funds in the month of July have still seen inflows, and in fact substantial inflows at that. 11,000 crore rupees or thereabouts have come through in arbitrage funds, which are categorized as hybrid mutual funds. Hybrid mutual funds as a whole, which are a combination of generally fixed income as well as equity mutual funds, as well as in certain cases multi-asset funds, which are also hybrid funds, which is a combination of fixed income, equity and gold. That category as a whole has received inflows of as much as 17,436 crore rupees, and the assets under management in this whole bucket in hybrid mutual fund schemes has stood at 8.4 lakh crore rupees at the end of July. A bulk of this, of course, the inflows have come through in the form of arbitrage funds. We have requested, or we have looked for some commentary on this, and we will get you some details and some analysis of this. We're also, of course, waiting for the SIP number, which has hit a fresh record high every month since, get this, July of last year. And it stood at over 21,000 crore rupees in the month of June. We have to see whether that will continue to take place. Now, overall, if you were to sum this up, it's a very strong set of numbers for the mutual fund industry. And remember, this is in a month where you've seen a substantial change in the tax treatment of mutual fund schemes, as it has been with the asset classes. So equity mutual funds, you have the tax treatment of long-term capital gains at 12.5% versus the 10% earlier. Of course, fixed income mutual fund schemes have not seen a change. International mutual fund schemes have seen a change, and some hybrid mutual fund schemes have also seen a change in the taxation structure. Now, overall, like I said, it's been a positive month. I'm also quite enthused by the inflows into index funds, and it's an inflow of as much as 8,019 crore rupees in the month of July, and it's an assets under management of 2.6 lakh crore in that month, or rather at the end of that month. All told, very strong numbers. We'll get you some analysis when we manage to get in touch with Swaroop Mohanty. We've got him soon. We'll soon get him on the phone line. In the meanwhile, let's go across to Ashish Maheshwari and Kush Bora, both of whom have been waiting patiently while I've tried to give our viewers a taste of how the mutual fund industry has performed, or the inflows that they've received in the month of July. It looks strong, gentlemen, but let's talk about the equity markets as they stand right now. And we were talking about ABB India at the start. I'm curious what you think about the performance, Ashish, and would you buy at this juncture? It has, as Anushi pointed out at the start of the show, valuations that are on the higher side.
Yes, I agree. At this price, valuations are on higher side. But traditionally, also you see ABB always used to be quoting at very high valuation. So this is ABB, Siemens kind of stocks. They are high valuation stocks. And again, if I see this year performance expectation, this year they'll do around 1,600 crore kind of profit, and their market cap is almost 1,40,000 crores. So the stock is not cheap, but only thing is, as they have delivered continuously, number one. Second, if we see their shareholding pattern, even FIs are buying this stock in last 1 year from 9.5% equity. Now they are owning more than 12% plus stake in the company. So some buying from them. So retail float is just hardly 5% in ABB. So valuations are always going to be rich. As far as performance is concerned, I think it was in line, if you ask me, though revenue was slightly short, but profit numbers were in line what the street was expecting. And another thing which is positive for the company is excellent order book. Almost 9,500 crore order book is there. But as stock has already moved quite a bit, if we see last 3 months, already 15% the stock is up from the previous lows. So my suggestion will be to look at this stock at some more correction, maybe 7,500 rupees if somebody is looking for long-term investment.
Okay. So I just want to point out one more thing. I was looking a little more at the Amphi numbers, and we've got significant inflows, as I pointed out, in equity mutual fund schemes. And I pointed out that once again, a large part of that is in the way of your sectoral and thematic mutual fund schemes, which has once again seen inflows of close to 18,400 crore rupees. A large part of that is once again in the form of new fund offers. There are as many as 3 mutual fund schemes that opened in the month of July, and the funds that were mobilized by these new fund offers stand at 13,735 crore rupees, out of which 9,790 crore rupees have come through in the way of sectoral and thematic funds. Do we have Swaroop Mohanty? Okay, I'm still waiting for Swaroop Mohanty to join in. In the meanwhile, let's jump straight to our questions. And we've got Santa Kumar, who's got the first question today. He's asking about a couple of stocks, Mazgon Dock Shipbuilders, as well as Paras Defense. And he's got both of them at a decent profit, is what he says. Or rather, he's wondering whether to buy at the current price, and he's looking to hold for a year, and whether or not he can make 30% on this. Kush, bit of a tall ask for stocks that have done quite well.
Hey, hi, Alex. Indeed, but the silver lining, if we can look at it that way, is the fact that they've corrected quite a bit already, at least in the last couple of months, and some of them are coming to a level where they might just start to seem attractive, at least from a trading perspective. So a Mazgon Dock for sure for now falls in that category. In the last couple of sessions, we've seen the stock form a base and move higher. So I think this is getting ready for a next leg of up move. It may not be as sharp as what we've seen in the recent past, but definitely attractive levels and a favorable risk reward ratio. So if you do want to accumulate, then 4750 is your stop loss. On the higher side, you're looking at a 5200 and then a 5450 as the next levels to watch for. Paras Defense hasn't really made a very convincing base, although it's respecting the last week and this week lows. But I'd give it some more time before we go out and get a conviction on this to buy afresh.
Gentlemen, we have to slip into a very quick break. We'll be back on the other side to take more of your questions, viewers, so do stay tuned. All right, welcome back. We're in the midst of taking your questions, and the next one is from Shalini, and she's asking about CESC, which she's bought at levels of 174, and she's wondering whether to hold on based on the fundamentals. I'm not sure whether we've gotten the earnings yet, but they are, if I'm not mistaken, out today. What's the view on this one, Ashish, on the fundamentals? Would you hold on?
Yes, I like to remain invested in this stock. I think this particular sector is doing good, and this group of stocks have also started now doing good. We have seen Sanjeev Goenka group of stocks now, like PCVL, etc., also started taking part in rally. And if we see CSC also, last quarter numbers were also quite decent. Almost for 30-40 crore PAT was up from previous quarter, and I'm expecting good set of numbers even this quarter because the power demand was quite robust in this quarter. So you can remain invested and hold for a target of 200 rupees in this stock, which I think can come maybe next 3 to 4 months.
All right. Balu from Bengaluru is asking the next question. Is this the right time to buy Jio Financial Services? And this is a technical question. I will come to you on this one, Kush. At 327 or thereabouts, would you buy?
Alex, if I may just give a quick update on one other stock, which is SGS Enterprises, and the reason I mentioned that is because this morning in the opening show we did have a quick discussion around it where we discussed it for a target of 120. It's at 1070. Please continue to hold or at least book partially for whoever got it. And so sorry, Balu, just to give that slight digression, but I think it was a little relevant at this point to give viewers an update. Now, as far as Jio Financial Services goes, yes, we've got this one on our buy list for a very long time. And any dip that comes around, we do look at it as a buying opportunity. My only suggestion here will be that don't be in a hurry, or rather don't look for quick returns. This might take some time. It's consolidating. Positional stop loss comes in at 10, but this is a good time to start accumulating. On the upside, we're very constructive. 355 and 370 are the targets that we're looking at.
Okay. The next one is from Ravi, and Ravi is asking whether to hold or sell Radico right now. And he's writing in from Tanuku in Andhra Pradesh. Since it's not specified what the buy price is and the time frame, I'll just come to you, Kush, on how this is looking in terms of the charts that you're looking at. What are the key levels to watch out for, and would you sell at this juncture?
Well, very delicately placed. The entire space has actually seen quite a bit of traction, but this stock somehow hasn't really participated, so doesn't give me that confidence. But yes, to your question that what are the levels? I think on the downside we're looking at a 1650, and on the upside we're looking at about 1730. Either of these two levels breaking will perhaps give a more clearer trend to play with. At the moment, that seems slightly on the negative side. So I might just avoid Radico Khaitan at this juncture.
All right. That's the view on Radico Khaitan, and avoid is the call from Kush. Hindustan Copper, and I'm not sure who this viewer is. Just a quick request, guys. If you can tell us what your name is, it'll be easier for us to identify who you are. But Hindustan Copper up and about in trade today, up as much as 3.5%. Ashish, on the fundamentals, I did read that copper prices are on the way up. Would you say that this is a good time to buy?
Yes, Hindustan Copper, I think is a good time to add in the portfolio. Even the last 2 quarters numbers, we see the profit just became double from 63 to 124 crore was profit into the previous quarter. And I think result is also on 12th of August of copper. So prior to results, is a good time to accumulate this stock.
Okay. BPCL, HPCL, would you suggest an entry into the oil marketing companies? Amit Murkute is asking based on the fundamentals, and what target would you give, Ashish, on these two counters?
See, as now crude is hovering below $80 and these companies have not cut the prices still. So this quarter also we are going to see bumper result from these companies. Only thing is, only one problem is these companies, particularly oil marketing companies, they don't move on day-to-day basis. So you need to be slightly patient to with these stocks. Then surely money can be made. So maybe BPCL you can buy at 320 levels for a target of 400 rupees, which is my pick number one. Along with this, I also like Oil India Limited, which is better bet than HPCL.
All right, Ishwar is asking this next question. Plasti Blends India and Advanced Enzymes, whether you have a view, I'm not sure. Kush, I would think that Advanced Enzymes is something that you would look at. Is this the right time that you should consider buying?
No, not really. The stocks had a very sharp run, but we're starting to see these negative divergences pop up, which means there could be a round of profit booking or maybe some sort of consolidation going forward. 410, 415 are the zones where the stock has support. The good thing is that on the way down, the volumes are quite thin, which means that there hasn't really been a lot of heavy selling. So around 410, 415 might be a good time to get into this stock. On the way up, you're again looking at 430 and a 445 as a target, and your stop loss would be close to that 400 mark.
All right. Let's run through a few more very quickly. GMM Fowler is the next one. I'm coming back to you, Kush. Short-term view on this counter. We've got Chetan, who's bought at levels of 1454. He's bought at elevated levels. Should he hold on?
So, Chetan, if you just want to give yourself a chance, my suggestion would be 1315 is a very strict top loss level that you should follow. If that's broken, please exit. The stock's on the way down.
Rocky's question, I'm guessing that this is Tata Motors. No, let me just pull up the chart. Hold on, this is Tata Teleservices, which he has bought at levels of 110, and he's got a significant quantity. He's bought 10,000 for a swing trade, and I don't know what the strategy would be. Kush, what would you suggest here?
There's a rebound after a sharp up move. There's a sharp round of profit booking that followed, but the stock seems to have made a base around the 89, 88 mark. The quantity is fairly decent. My suggestion would be to keep a strict stop loss, around that 88, 89 level. On the way up, don't wait for your target. Keep exiting at, interim levels also, even if it means exiting at a slight loss. So, 102 and then about 105 and then eventually 110 are the levels, to exit at. But keep a strict stop loss at 88.
All right. Unfortunately, we are out of time on this edition of Ask Profit. Thank you so much, gentlemen, for taking the time. Ashish as well as Kush, thank you so much for joining us on Ask Profit. We had a bit of a disrupted show on account of the Amphi numbers, but we still managed to take some of your questions. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.
Hello and welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all the stocks which are the flavor of the season, specifically the day as well. But before that, a quick look at how things are faring as far as the markets are concerned. The benchmarks currently trending higher. The Nifty is trending well above the mark of 24,000.